And when I'm talking about success today, I'm not talking about getting a couple of new partners over the next couple of years. I'm talking about it building a long-term sustainable program where you have partners, the right partners, who stay with you year in, year out, such as Shell with Questacon for 30 years, Telstra with the Australian Ballet for 30 years. And the key then, if you're getting the right partners and servicing and retaining them, it allows you to focus your new business development activity, the time, the energy on budget, on getting new partners to supplement and add to the ones you've already got. The mistake that people make is they don't service and retain the ones that they've won. They leave, and then you spend your new business development activity time trying to replace the ones that have left. And that's why servicing and retention of the right partners are so important to get that lifetime value. Now, I mentioned it's a very challenging situation and that people don't often understand the challenge, but likewise, people often don't understand the upside. When I'm reading proposals, often the only thing that people are asking for is cash, and that's missing out on 9 other things that you can get for corporates. So I just want to run through what are some of the other things that a company can give you that you might want to consider. So obviously cash is good, yes, we like that for your organizations, but it's also about goods and services in kind. Now, flights, accommodation, cars, computers, wine. Shall I say the wine one again? A wine sponsor is always good. There are so many things. The key here is when you walk away from here, you must walk back into your office, go to the finance manager, knock on the door and say, can you give me a list of every line item that we're spending expenditure on in this organization? That is a starting point for finding potential partners around contra deals. Go and knock on the door and say, I want a complete list of all expenditure, and see what you can turn from a cash relationship into even a part contra relationship with some of those people. So goods and services in kind are important, but also revenue generation opportunities. This is the classic cause-related marketing. It's the Bridgestone blue hubcaps going to their Light the Night fundraising event. This is the McGrath Foundation and the pink bottles. This is obviously a classic way that not-for-profit organisations generate additional funding. But I think the third one is actually really key. That is about driving an awareness and understanding of your organisation. This is particularly relevant for the smaller organisations here. Because what companies can do is to amplify your brand, amplify your marketing. And if I go back to my CommBank days, if we gave an organisation no money, but we did give them money, but if we didn't, the fact that they were tapping into the marketing department of the largest company in Australia on the stock exchange to help go through their channels to tell your story. If they gave you no money and just did that, the value to you would be enormous. And by the way, all those 3 things I've just talked about here should be captured in your report and accounts, I believe, or at least in your own tracking of the revenue coming in. It's also about audiences, supporters and donors. Some of these companies have huge numbers of shareholders, huge numbers of customers, huge numbers of staff to access for whether it's tickets or fun runs or whatever you're doing. They can provide you access to their audiences. And specifically volunteering. Volunteering falls into 2 categories. There's the volunteers you need for your events, and there's also the volunteering opportunities that you can provide. Let me give you an example of one of my favourite clients, Landcare. Telstra every year put 1,000 of their staff through a Landcare volunteering day. At the end of that day, Telstra measure the employee net promoter score of those 1,000 people, and the 1,000 people going through that program have a higher employee net promoter score than the general Telstra population. This is a brilliant testimonial of the impact of corporate partnerships on achieving business outcomes, which is retention of staff. And Landcare use that in every proposal that they go out to market because it's a proof point, and what you're always looking for is proof points. Table sales. I'm going to give you a tip on selling tables here. You've got to remember that companies are not just one entity. Companies are multiple business units with multiple budgets. The key with selling tables to your events is not to sell someone one table, it's to sell them on the opportunity and benefit of selling multiple tables. So let me give you an example. Let's say that, and I go back to my CommBank days, let's say that we were getting behind a particular organisation. What you should be doing is going to your partners and saying, look, you're behind this. What we'd love it if you could do is go to your ad agency, your digital agency, your PR agency, in fact, all your suppliers, everyone that loves your business, and ask them to take a table. Because just imagine the scenario. You're the digital agency for the Commonwealth Bank. Are you going to say no to taking a table and perhaps jeopardize your account? No, you're not. That's smart business development. So you've got to think of all your corporate partners and think of all the access that they can provide you to all their suppliers, all their distributors, and all the people that want to do business with them. It's also about credibility. One of the first things I'd always look at when I was at the CommBank, I'd say, who else have you got on board? because immediately my risk is reduced. If you turn around and say, good news, we've got Qantas and Macquarie Bank, immediately I'm thinking this sounds like probably an interesting property to get involved with because they've already done the evaluation and they're in. So it's not just reducing the risk, it's also the types of brands that other companies want to be associated with. So it kind of who you have on board gives you credibility. It's exactly the same model that Westfield work on when they open a new shopping centre. They get Myer and David Jones in there first and everyone else piles in. Myer and David Jones aren't in there, no one else is going to go in. It's exactly the same principle. But it's also about expertise. I mean, there's probably within your organisations a fair degree of expertise, but maybe there's some stuff that you can't do. And also, you know, just in terms of finance, you might have funds on reserve, having a financial institution to help you advise whether to get the best rates and that kind of thing, or it might be specific technology like building websites or that kind of thing that you can't do in-house that they'll do for you. But the last one's an interesting one, brand positioning. Let me tell you a quick story. Recently, someone contacted me with the email title, "Help!" exclamation mark. And what she said was, look, I've got, and these were her words, not mine, I have 2 Neanderthal board members and who think we should be approaching tobacco companies. So immediately I was taken back to the 1970s watching John Player League cricket and Benson Hedges cricket in the UK, and I thought that was all over. But no, somehow in 2018 board members think that tobacco companies is a good thing. She said, Richard, I know that you know this is a ludicrous idea. I think it's a ludicrous idea. What do I say as an argument? I said, well, look, this will be my argument that you should put back to the board. Who you have as a partner is going to say a lot about your organisation. And what it would say to me is that you are not in tune with society. Because cigarettes and tobacco is on the out, yeah? Just see all the stats, it's on the out. The government doesn't want it. And more than anything, if you don't believe that, other corporate partners will not want to sit in the same room with tobacco companies. And I say that, and I'll come on to corporate partnerships workshops in a moment, but I cannot imagine in a corporate partnership workshop saying to Telstra, now I'd just like you to partner up with that tobacco company over there, Qantas tobacco company over there, can you work out how you can do business together? They just won't want to do it, it'll be very uncomfortable. So the reason I put this list up is I want you to think about the concept of the ideal partner and to think about when you're approaching companies, there is such a bigger opportunity than just getting cash. So can I ask you, hands up, who would say they have partners which tick a lot of those kind of boxes? Yeah, great. Who would, hands up if you'd like partners that tick all those kind of boxes? Absolutely. So think about the bigger picture, getting the right partners on board. And I'll give you a little tip here also. If they're only giving you cash, cash can be turned off like that. However, if they've gone out to all their shareholders, subscribers and customers and told what a great relationship they have with you, suddenly it's going to be a little bit harder for them to get out of those relationships, because that was something we always thought about when we were in these kind of roles.